All right, guys, it's Paul Singh, the Market Speculator, with the trade report for Friday, May 17th, 2019. Let's look at SPY here. After some skittishness in the morning, more stuff with the China trade war. Doesn't look that positive right now, but the market has reversed. The red open. Futures were down 1% at one point, and we've reversed that and basically got to break even here. Now it's down 0.01%. We were green for a little bit. But market is handling this stuff pretty good, all things considered, because this is kind of scary stuff and for the market, and it's holding up well. That's a good sign. Still, we don't know what's going to happen. It's best to be cautious. Normally, I'd be getting more aggressive with this kind of price action. But again, a couple of concerns. One is the distributive volume pattern. When we've pulled back on a little heavier volume throughout here, and then especially through May here. And the green moves have not been on quite as much volume. So that's a little bit of a concern. In the indexes, sometimes that gets ignored. But on top of that, just the fact that, this geopolitical news and, we don't know what can happen. So I'm going to play it cautiously, but that doesn't mean we just stay. I'm staying out of the market. You can if you want. That's totally fine. But I'm going to try to stay with, say, 2 to 3 positions. I'm not going to get aggressive and go, 5, 6, 7, unless we get some really good news or indications. But I will try to take, the best relative strength stocks I can find and take, maybe 2 or 3 of them. So the Qs here also pretty much doing the same thing. And then IWM is lagging down 0.6%. Now, yesterday we took profits in Twilio. Really nice move here. This is what I mean by when we do take our shots, it's going to be with relative strength stocks and sectors that have held up really well. And obviously software has been one of those. We took Twilio, really nice win here off the continuation pattern, the pullback, the hold of the moving average, the remount of the moving average, then we got to pop to the top of the range. It was looking like Twilio might keep running. It has pulled back here. I'm going to watch to see if it consolidates and then breaks again. If it were to break 145, maybe we could re-enter that. But there are a ton of great software stocks. A bunch of them are on our focus list. And then we are in another one, which is MDB. Really nice move yesterday. Our entry was at 138, got up to about 148 yesterday. 10 points. That actually is enough to take profits. We'd be getting 2 to 1. It would be another win that really outpaces any losses we've taken. But I'm going to go for the top of the range here. And it might get shaky and we might get some back and forth. I will likely move my stop to, and not likely, I am moving my stop to entry here. So, this is one of those trades where, it's tough to potentially give up a win here. But at least we are protecting ourselves in the sense that this is either a break even or a big win. We won't take a loss on this unless something crazy were to happen and it were to gap down. But we're moving the stop up to 138, and we'll see if we can push up here to the 150s. That would give us a really big win. And then yesterday I entered oil, UWT here. This looks like a nice continuation pattern. If you see here, we bottomed here. Slowly been running up. Then we had the pullback. Now this looks like we could be forming that cup and handle. Let me use USO so you can see the moving averages better. You can see here the moving averages are below us, not above us like UWT. And keep that in mind when you're trading the leveraged ETFs. You use the moving averages and the support levels of the underlying, not the leveraged ETF. So you can see here we've held the moving averages and are starting to bounce here. So good low risk, high reward play. So UWT here, it's sitting about 20 cents below our entry at this point, and we're risking around $1. So, not risking much. And, my risk is only about 0.6 or 0.7% versus the 1.2% because of the market. So we're taking very low risk here in the 2 positions that we are in right now. Just took profits in Twilio. Now, we talked about relative strength. One area I really like right now is home builders. Look at that relative strength here. While the market is, let's paint a picture with SPY here. You can see here in terms of percentage gain, in terms of where we are in relationship to the moving averages. Look at XHB, and you can see, XHB, there we go. You can see much higher above its 50-day moving average and way above the 200-day moving average. Very strong move in terms of percentage gain here. So I like XHB. It's a relative strength area, has held up really well on the pullback. And if we look at NAIL, which is the leveraged ETF, looks really good here. We could do one of two things. We could just take a shot here, maybe heading into the weekend, or we could wait for a break of this range. That might be the better way to go here. Wait for a break of 50. That would clear this range and then set us up for a move higher. And think about where we could go here. If we got to this top of this range here, it would be 57. We'd only need to risk about a 1.5. So you'd be getting 7 points to 1.5, which would be like, what is that, 3 to 1? And then if we went even higher, we'd be talking about 5 to 1, 6 to 1 on this. So I really like NAIL here, something to pay attention to. Disney looks good here after a deep pullback. Still looks very strong and is holding the 9. Roku is breaking the range we talked about right now, 85. I think it's setting up for a big move here. So potentially we could take Roku, and then I don't know if we need to go over them again, but all those software stocks that are on our watch list from yesterday's video still in play today. So it's basically right now software, home builders. You could take a index ETF. That's pretty low risk when we think about where we could place our stop and where our targets would be. Or something like Facebook, which has filled the gap here after a strong earnings, and Twitter as well after a strong earnings. Let's see if it can hold the 9. So there's some potential here heading into the weekend. Haven't decided if I'm going to play it cautious and just go with 2 positions heading into the weekend or add 1.